Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, July 16th. We are looking at Window Traders market profile of the SPY IWMN triple Qs. Tremendous amount to talk about today. We're going to go over all the charts, what transpired today, what we're looking for going forward. First things first, it's amazing. One of the people in my room said, usually when you start the videos, you say we have one and only one upside destination. Well, we have 10 upside destinations now. Right? We haven't seen that in a while. All three indices that we follow, trend day down. Open and drive down in SPY, Russell. Highest accepted price in SPY. We all go out with price probes. Volume, decent. Nothing great, decent. 72 million with the after hours. So maybe we do 80 million today. Shocking that we do it once again on a down day. The difference today from what we've seen recently is even though we gapped higher and had higher value to start, we've seen a lot of days where we gap higher, then all of a sudden we trend down or vice versa. Yes, we did gap higher and then we open and drive down. We end with a trend day down. But the big thing, we held the trend day. Not only did we hold the trend day, we expanded it. Change took place. I couldn't have been more trying to warn my room at this level, saying do not get complacent. Because the market was slow, we had only one set of single prints, we were 7 wide. Once again, the sellers aren't getting it done. I said, if we take out today's low, which was D's low, and take out yesterday's low, there's a chance we can get some pretty good acceleration. And we did. And I finally took huge advantage of it in K period, which we'll go over. Another thing I want to point out, I was talking in the room late saying, and again, you'll never hear me say, sell will come, or this is it. You always know, people have been following me for at least 2 years now on YouTube and in trading rooms. I always give both sides of the story, right? I'm always going to give a long scenario and a sell scenario. But we were talking about back in 2018 in September when the market put in an all-time high, late September, and then in October, not long after, it was a couple of days after, maybe a week after, but not much later, we had a trend day down, kind of similar to today. And that certainly marked a short-term top for the market. And we all know what happened 2 months later in December. Now, I'm by no stretch of the imagination am I saying sales coming in. I'm just saying it's very reminiscent of what transpired back then. So we made a new all-time high 2 days ago, and now we have this. Let's keep it on in our mind going forward. Hey, we might gap higher on Monday, the way this market goes. But for the first time in a while, it felt that the market did what it should do when it's attempted to go down and get more extension and more single prints rather than this V-shaped recovery. And it's only healthy for the market. We're only $6 off the high. This is nothing. This is nothing. Again, we'll get a $5 time frame in one time frame, a $5 range in one time frame. So this is nothing, and it will only be healthy if we do shake out and come out of this straight up in the monthly and the weekly, come at least into balance for a little while, or even a decent while, and then attempt to start going back higher. It would make the market stronger. As far as my trades today, so we open on a gap. Yes, we pushed down. And let me tell you, we nailed it in the trading room today as far as calling it and trading it, and not just myself. Right from the start, one of our veteran traders said, there's something different the way they're selling this market in A period and again in B period. Now, at the time in A, I wasn't sure if it was just a inventory adjustment, like I said, from overnight and from yesterday when we ran everything up. But, he was making references to they were selling below the bid. They were being aggressive. Now, I put that in my mind. He was actually short. I actually took a long in A, but I didn't take it until we filled the gap, tape it off initially, and against value high from yesterday. And I did okay on it. Wasn't going to hold on to it because it was an open and drive down, But for now, we had higher value. So I took the 434 call, worked out. I was like, I'm not adding if it comes back down. And it didn't. It did come back down, and I didn't add. Well, once B opened and took out A's low, well, then it's something changed. Time to get on board. And I did. And I took the 436 put plays because we were one-time framing down and started and traded those down. That turned out to be a nice trade. Now, I also took a long in B after. So I took the short play initially, had a nice trade. B got down to value low from yesterday, and it stopped for a little bit, and I took the 433 calls just to see. Remember, we're not trend yet at that time. We didn't have the single prints. It looked like we might have them, but we didn't have them at that point, and value was still overlapping to higher at the time. So I took a call play after my short play against value low, and it worked. So 3 for 3 at that point. But once C period opened, and value now went, it was still overlapping to higher, but barely, and we had singles. I was like, that's it on the buy side. I'm looking for shorts. And I took 434 puts again in C period. One thing I failed to mention, by the way, we had a highest accepted price in B. It opened, didn't go much higher, rolled over, just like the lowest accepted price is very powerful, so is the highest. And what is that? To me, this is where A closed. Here's where B opened. It went a little bit above A's close. Again, I'm in 6-tick increments or 7s. It did go about 10, 12 cents higher, but that's all it got. That was another telltale sign that selling was strong. So then after that C short, again in E, I did nothing. So I did well on my C short, did nothing in D. E open, I'm like, we're one-time framing down. Took the short against D's high. I should have done it in D against C's high. I didn't. Took the short in E, came back down, took that off. And the reason I was taking them off, even though we were a trend day down, is because we couldn't take out yesterday's low. So at the time, I'm saying, yes, we are trending down, but these sellers are still fairly weak. We can't even take out yesterday's low. I said, if we take out yesterday's low, we should go get the 9th low, if I could ever find it, and get the gap. Well, at that point, we couldn't do that, and that was troublesome to me. So I wasn't going to stay married to shorts at that time. F stopped the one-time framing down, got into the singles. Now, at the time, value high and half back was a little bit higher than F. I was waiting for F to try to get there, and I was going to take a put play, and probably a sizable one, but it didn't. And the reason I didn't even start one is because they've done such damage to short sellers over these past God knows how long. I wanted to have a better entry on my short in case they were going to do the same thing and fill the singles. So I never got anything off in F. Now I could have and should have taken a short in G and H against F, but I didn't. But sure as hell, I could tell you where I made up for it. So we never got up to F. Now that's not an afternoon rally high because it was still single prints. But I came down. I told people, be careful starting to fade again. I said, if we finally get below, I had no tempo to it. I said, but if we finally take out D and E's low and yesterday's low, I said we can get acceleration. Well, J opened, did that initially, took it out, but wasn't getting much, right? But we had another set of single prints, looked like we were going to have in K. K opened, had singles again. I didn't short it yet. Still didn't short it. Because we were still playing with yesterday's low. But once K finally held the singles, got below yesterday's low, as soon as we took out J's low, jumped on 100 put play, 434 puts at $1.54, and started taking them off and sold the balance out when we filled the gap at I forgot what it was, 215? Actually higher than that. I think I made 70-something cents on the last batch that I took off. So finally a touchdown trade in K period. No, actually in, when did they fill the gap? Was it K or L? Well, whichever period it was. It was L period. I believe it was L period. Anyway, finally took it off and had a home run trade. And then they continued to push. Now, I could have gotten short again, but I had a really good day and an awesome trade to end the week. So I just watched it. Again, once we took out this is where change took place. D's low from today and yesterday's low. And I said to the room, I don't care if you take a short. Stay out of a long. Especially for inexperienced traders, don't get in the way of it. Turned out to be a really good day for all of us in the trading room. For $30 a month, folks, and you're getting these profiles streamed as you're getting the play-by-play, not just by me, but by all the great traders we have in our room who are typing throughout the day. Oh, one other really important part, and I know this video is long, but I think it's more than worth it. We had an outside... Oh, what was that? We had an outside day down. Outside day down. So now outside week downs and outside day downs haven't proved to be very profitable going forward the next day, but we're going to see. Now, destinations for Monday. Upside, L's low, price probe, 431.35. Then we have 4 sets of single prints. We have 431.95. M's high to K's low at 432.04, small one. Then we have 432.24 to 56, L's high to J's low. Then I have one 432.84, K's high to I's low, filled at 93. That's a small one. Then we have 434.24, F's high to 92, A's low. So 4 sets of single prints. So you treat this one distribution, A's low to the day's high. You can treat, I would probably use D's low to F's high as the second distribution. And then I would use K's high to the day's low, even though there's 2 sets of single prints there, as the third distribution. So this would be a triple distribution day for me. Then we have the highest accepted price, B's high of 435.27, and then today's high of 436.06. Great range today, right? We had a great range, $6.04. That's awesome. Volume and volatility. That's the lifeline, the bloodline for a trader. Downside, 430.92, which is now a weekly low. We closed right at it. Does that necessarily mean we're going to open there? No. But if we take it out, when we get to the charts, you're going to see change taking place. Then we have nothing until the 50-day moving average. The 20-day moving average, which is right around, well, we'll get to that on the chart. We have last week's low, 427.52. Please write all these down so we don't have to go over them Monday. 427.18 daily low, 427.13 daily low, 425.89 weekly low, poor low. Now let's get to the charts. And I know it's long, but if you're a trader and you're trying to learn, hopefully this pays off. We're going to start with Russell. So Russell, believe it or not, this is still balanced in the monthly. Right? We said Russell's been having troubles. It's still balanced. The balance to me is March's low of 207.21. So believe it or not, this is still balanced. Next stop on the monthly, though, is 211.54. Okay? Balanced, though, on the monthly. Weekly, came out of an inside week to the downside. Down. One time framing down 2 weeks. I said 214.05 would be a big destination. Well, guess what? We got down to 214.47 this week. If that doesn't hold, again, 211.54. And then we start looking at that monthly low. So the monthly's balanced, the weekly is down, and the daily is, believe it or not, balanced because we took out yesterday's high. And they had an outside day down. So they went from down to balance, even though we closed so poorly today, because we took out yesterday's high, even though we finished at the lows. So now we went bear, back to balance. Now do they come out bear again on Monday? Or do they attempt to take out this 2-day balance and go bull in the daily? But right now we have monthly balance, weekly down, daily balance, but it's an outside day down. Triple Qs, monthly, healthy, one-time framing up, 4 months. Weekly, still healthy, my friends, one-time framing up out of an inside week for 8 weeks. So even though today we're down almost 0.8% in the triple Qs, still healthy on the monthly and weekly. However, daily has changed. Yesterday, daily came into balance. It is now down. So up monthly, up weekly, down daily. Now let's get to what we trade. No change in the monthly. Yes, we came off the high pretty good, but right now, very healthy. By the way, before I go back to the rest of it, this is what I was talking about in the trading room. This is September of 2018. We closed at the high was 293.94. It was our all-time high. We closed at 290.72. We opened at 292.11 in October, got up to 293.21. We missed the all-time high by 70 cents. And then that following week, we had that trend day down pretty big. And then look what happened. October got crushed. Inside month November and December really flushed. I'm not saying that's going to happen. I'm just saying it was kind of reminded me, today's action kind of reminded me of that day in early October that set the wheels turning for change. And let's look at this. Remember, we came out of balance in May of that year of 18, and then 1, 2, 3, 4, we one time framed up 5 months. But we're one time framing up 9 months out of an inside month right now. 9 months. Monthly healthy. Weekly still healthy. One time framing up 4 weeks. Okay? Still healthy. If we take out today's low, which is the weekly low, we would come into balance. There's no guarantee that's going to happen. Right now we're one time framing up for 4 weeks. And then the daily is balance. We came out of balance just like Russell. We came out of balance down yesterday, but because we took out yesterday's high, put us back into balance. It's an outside day down, but it is balance. If it's going to go down, all we have to do is take out today's low and the daily's right back to down. Here's your 50-day moving average, which is at 429.47. Then you would have that other weekly low we talked about at 427.52. And the 50-day moving average starts coming into play down right now at the 422.97 level. So the question is, 2 months from now, are we going to look back and I'm going to say, well, do you remember we talked about what happened back in September? Maybe. Or maybe this is just a real nice healthy flush. Again, I think a healthy flush would take us at least to the 50-day moving average, if not get below it and get to this level here. At least the 414 level. I still think we should wipe out this. I think we should get that monthly gap. But anyway, I know it's a long video. I hope it's informative and educational. I hope you had a good week. Have a great weekend. Rest up. Come check us out at camelbacktrading.org. And we'll speak prior to the opening on Monday.